What's up, everyone? It's Hey John, and I have three letters for you. CPI. And no, I am not referring to the elementary joke where they say, hey, spell and say ICUP, I-C-U-P. Absolutely not. That would be funny. The CPI, not so funny. If anything, it is just straight up demolishing the markets. It's demolishing the cryptocurrency market. It is demolishing the stock market. How are these economists missing these estimates so big every single time? I'm going to have to start saying CPI instead of CPI because these numbers, well, they just don't add up. They just do not give you any sense of accuracy. And this is the reason. And this is a sole reason as to why you are seeing the markets sell off. So I want to dig into this because there's a lot more to this than just numbers. Remember, folks, cryptocurrency is not in a bubble by itself. Remember that institutional money, the majority of their investments, say 90 to 95% is in stocks and 5% is in cryptocurrency. So you better believe if that side of their investment gets affected, you better believe the cryptocurrency investment will also get affected. And that's why we're seeing everything: gold, crypto, Bitcoin, S&P, Dow. Woo, woo, woo. So I want to cover the CPI, Consumer Price Index, and I want to cover some of the big ticket items. Fuel, 16.9, previously 2.7. You can see oil. You can see gasoline, you can see energy commodities. They're all negative and now they're all positive in a big way. You're seeing a huge swing, and this is why you're seeing so much money at the pumps. Used cars, we were seeing a decline February, March, April, all negative, and now it's increasing once again. We're seeing food 0.9 to 1.2, 1 to 1.4. The shift isn't that dramatic, but it's still on the upside. And we're seeing apparel go from negative to a positive. So what does all this mean? And if I'm in cryptocurrency, why do I care about the stock markets? Why do I care about the US government's CPI reports? Well, like I said before, folks, we aren't in a bubble and we have to be mindful of what's going on. It's better to know than to not know. The fuel costs are surging, and the primary reason for this is because we're seeing decades of no investment into energy. If you ever invested into oil for the past 3 cycles, and that cycle is usually about 3 to 4 years, well, it's always been negative returns. So why would anyone in their right mind want to invest into oil and energy, fossil fuels right now? They've had a track record of just sinking. Doot, 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 doot. And now, when we see this whole Russia-Ukraine conflict, well, guess what, folks? The Europeans, they get the majority of the thermal fuels from Russia, Mother Russia. And now they're talking about sanctions and saying, no, we don't want your Russian oil. We don't want your Russian thermal fuels. We don't want your Russian natural gas. These big pipelines being built for years, if you turn it off all of a sudden, where are you going to replenish your supply? The Saudis can only produce so much. The Americans can only ship so much LNG on these tankers. And when you ship a tanker from America, say Louisiana port, to somewhere in Germany or somewhere in Europe, it's going to take a lot longer than have a pipeline continuously flow from Russia through the Nord Stream 2 or the Nord Stream into Europe. So if you think the inflation is bad here, then inflation is even worse in Europe. And if you're in cryptocurrency, guess what, folks? It's worldwide. Cryptocurrency is borderless. It goes everywhere. It does not discriminate. As long as there's a PC and a node, you can make a transaction. And while we see a rise and a surge in food, utilities, fuel, cars, auto industry, well, these industries, they affect your daily lives. And you need electricity, thermal fuels, to produce electricity to power your cryptocurrency miners. Even proof of stake, it requires power. Even though it's a lot lesser, but it still requires power. Even though institutions have 5 to 10% of their portfolio in cryptocurrency, mostly in the top 10, right? Bitcoin, Ethereum, etc. Well, their 5 to 10% of their portfolio is a lot larger than yours and I, because these guys are the big money. They are the quote unquote smart money. And this is why we need to watch these numbers here. Now, there were talks of, okay, we're seeing the peak of inflation and we're gonna come back down and battle it with more interest rate hikes. Well, ladies and gentlemen, those were priced in. Now, when you see an increase in the inflation, this means that the Federal Reserve, Jay Powell, Janet Yellen, they are all behind the curve. And this means September, it was the month where we say, okay, this is where we're going to see a wash, possibly maybe a decline in the basis point movement. No, folks, this is putting it back on the tables, and most likely we're going to see another 500 basis points hike in September. And that means that this recession hasn't even really, quote unquote, started, even though it has started. I know that sounds weird because the inflation has not tapered down yet. It's still continuing to increase. And that means that this can persist until early next year, until we see a peak. So what we're going to see is a continued rise. And now we're still seeing it to continue to rise. And eventually, once we raise up interest rates, basis points, we're going to see a flat line and then start to come down. But still, we're in the beginning stages, folks, the beginning stages. We're still continuing to climb. Even though it's only a 0.3% difference, remember, folks, the GDP is ginormous. 0.3 of a trillion is a lot. For the folks curious, you can see it on a chart right here. May 2022, 8.6%. Previously, April, 8.3%. So you can see on a chart, we are still continuing to rise. With this continuing rise of inflation, you have to wonder, what is the true inflation rate? Is it really 3%? I would say heck no. 8%? I would say heck no. Because when I go to the pump, I don't know about all of you guys, in California, I used to pay about $3 to $4 for premium 91 gasoline. Now I'm paying upwards of $7 to possibly $8 in some parts of California. So I'm seeing at least 70% increase in my fuel costs. It's surging nonstop in the past few months. Yes, 8% includes everything, but some parts of the economy are bigger than others, and the energy costs we're paying, it's ridiculous. And it's due to all of these factors that I've just mentioned. And you have to bear in mind that the retail investors in cryptocurrency, they don't have the amount of money you think they have. They can only weather the storm for so much. And you have to bear in mind, if the retail investor is spending their discretionary income on basics like fuel, food, and housing, then that means they have less money for cryptocurrency and they are not able to weather the storms. So therefore, these retail investors, if they reach a point where they need money, they will liquidate their cryptocurrency without hesitation, because at the end of the day, you have to put food on the table. So speaking of putting food on the table, we can see cereals and products 1.0 to 1.4, so it increased. We're seeing eggs increase to 1.5 from 1.1. We're seeing dairy and related products 2.5 to 2.9. And the reason why we're seeing the increase of these prices here is, simply put, is because we have a network and infrastructure in America where we transport our food thousands and thousands of miles. So when you see a surging fuel cost, it's going to tack it on to your food, because not only are you paying for the fuel to transport it from point A to point B, which is usually thousands of miles, you have to also understand that these fertilizers are usually petroleum based, they're nitrate based. So that means that you need oil to produce these fertilizers. And if the cost per barrel of oil increases, that means your fertilizer increases. So that means you're paying double. Not only are you paying for the cost of increase for fertilizing the food, you're also paying for the increased cost of fuel to transport the food. So ladies and gentlemen, we are reaching an inflection point in the markets. So this means that we are reaching an inflection point in the market. I would say in the next few months, we're going to start seeing a plateau and then possibly come down. But in the interim, we're going to see more hikes, more basis points increasing, and thereby most likely that means that the price of the cryptocurrency and stocks are not priced in yet. That means with each new hike, they're going to price it in by pushing the prices lower. So this means that we're going to start seeing some asset valuation destruction and the strengthening of the US dollar. So this means that in the future, your US dollar is supposed to be able to buy more, because we're combating inflation by using the interest rates. Looking at the cryptocurrency market, everything is bloody red. Bitcoin is 29,400, down 2.5%. Ethereum down 3.5%. BNB is down 0.47%. Cardano is down a whopping 8.26%. So as we herald the institutional money, the big money, the smart money into the cryptocurrency market, well, now we're also being volatile, and now we're being subjugated to their plays and their strategies. And this is why you need to be mindful of what's going on in the economy. Make sure you guys like, share, and subscribe, and I will catch you all on next one. Shh.